Welcome to the weekend review of Nifty. For a change, we will be covering the Muhurat session and Monday being holiday, the week beginning 17th of November will be covered in this review. A very happy Diwali to the viewers from chartvideo.com family. For disclaimer, please refer to my website chartvideo.com/disclaimer. On Thursday, the 12th of November, a bearish Harami cross was registered. Whenever such a formation takes place, one should just look on the left side of the bar for which the Harami cross was formed. The high and the low is crucial. If we have a close above 12,769, which was the high, the bearish Harami cross gets negated. But in case if we have a close below 12,571, the bearish Harami cross will have its effect. Well, if it has its effect, how much can we expect on the downside? Or if it is negated, how much can we expect on the upside? The primary trend, the intermediate trend, and the short-term trend all being up, it would be just bullish to call that the market might just reverse itself. But all the same, we need to look at supports and resistances where good trading opportunities can be made. The high registered at 12,430 on 28th of January has been successfully taken out. So for all correction, this particular level should be closely watched. As we are at all-time high, the resistances needs to be calculated from psychological numbers which are at 12,800, 900 and 13,000 and so on. But under such circumstances, Fibonacci retracement levels also do provide good cues. The Fibonacci retracement of this particular fall of 161% was at around 12,323, which had been crossed by a gap, and the next one is at around 12,812 levels. These are the places where I will be looking out for in coming days. Will it reverse from here? Well, there is no point in talking about reversal. It's better let's ride the trend till a reversal takes place. The relative strength index of 14 unit on Nifty daily charts, as you can see, has reached a level of 74, 75 odd levels. In fact, 2 days back, it was as high as 77. What can we expect? Well, let a negative divergence on short-term form here. Then you should take the decision. Have we got a failure swing? Well, not as yet. If we get a failure swing, which is supported by price, then we can say that the uptrend might be under threat. As of now, the uptrend is on, and till it is on, so be it. In 2018 and 2019, we had 3 occasions where RSI had moved above the 70 line and had overstayed here. Let us have a look what happened during that time. In the first case, in January 2018, the market had shot up but had corrected severely after the budget in February 2018. The RSI had reached a level of 86 odd before reversing. In the second instant, RSI just reached above the 70 mark, rather here 76 mark. The price did not correct. It held on to the 13-day SMA, moved forward, and it was violated only on 3rd of September 2018 with a very big black candle. This particular day made the price close below the 13-day SMA and marked a signal of another sharp fall. What happened in March 2019? Well, the RSI had moved up, then came down. The price took the support at 13-day SMA. It stayed all along and that too for a quite significant period of time, made negative divergences all along, and just before the election, or rather a month before the election, a dark cloud cover had formed, and thereafter the price retraced back. This particular correction was from 11,800 to 11,100. In the previous occasion, the correction was from 11,751 to almost 10,000 odd levels. I am not saying that such correction will come up right away, but the very thing is, if we have an exponential rise, it is generally followed by an exponential correction thereafter. As you can see in this particular situation too, an exponential rise had taken place, and thereafter a major correction came up from 11,751 to 9,951. Here the wisest thing is, do not short in the rally, for you might be caught on the wrong foot. Wait for reversal signals, then attempt it. And the reversal signals will come from the RSI, will come from the candles, will come from the moving averages also. What is our favorite indicator, ADX, indicating on a daily time frame? ADX is moving up right now at 29. Everything is okay. PDI is greater than minus MDI. Nothing special as such. I would say it just indicates that the trend as of now is up. Moving on to the hourly chart of Nifty, as you can see, the ADX had peaked itself out on 11th of November, and thereafter it is gradually moving down. Well, in case if it continues to move down, a trading market of sort may come up. Now, it is equally important to notice if my ADX again moves for the upside from this place. Because if ADX moves up from here, it will take a U-turn. In that case, the dominant DMI will give you the direction of the next move, and which is generally fast in nature. Reducing the periodicity of chart, we have got some very important clues. Watch out the ADX on 30-minute scale on Nifty. The ADX is extremely flat and at a very low value. Well, as long as it is flat, the trading market continues. But if ADX starts moving from a very low value, which I had told you earlier too, we do get a very strong move. We need to take the direction of the dominant DMI. That is, if plus DI moves up in that time, we need to take positive trades or long trades, and if minus DI moves up, we take short trades. The RSI as of now is just above the equilibrium. Well, to some extent, I would say the indicator has corrected itself a lot, but the price hasn't, which indicates perhaps we may head again for the higher side. From the chart, moving on to the derivative section, what we notice is this time the PCI tried to peak itself out at around 1.77 and thereafter has cooled sizably to 1.53. Whether the cooling continues, in that case a trading or slightly downward market may come up, but if it again starts moving up, we may expect another bout of buying. Before we move on further, a small announcement on my candlestick course which I would like you to view. Demystifying Candlesticks, a comprehensive course on Japanese candlesticks. It consists of two videos, the first one devoted to nomenclature and examples of same in the stocks and indices. The second video covers blended candles in details with examples of how it can be used effectively by traders. Thorough discussion on gaps and windows has been done for traders to get that extra short. Candlestick rules in support resistance have been discussed along with examples where trading opportunity arises. Candlesticks have been combined with trend lines, moving averages, RSI and ADX to sharpen and plan trading strategies. Do enroll and get started instantly to enrich yourself by demystifying candlesticks from the comfort of home at an extremely reasonable price. Welcome back. Muhurat session marks a new year, a new beginning, a new hope. With this particular Muhurat session, I am changing my open interest calculation file, and which has got the Nifty future instead of Nifty, and well, the percentage change of open interest is here. Nothing special to add. The price is moving up along with gradual increase in open interest. In that case, I would say that the trend is healthy. Taking a cue from Nifty and moving on to Bank Nifty, here too the trend is strongly up. The intermediate uptrend is strongly up. I had seen many had commented this as an evening star. Fine. Will it show it effect or not? I would suggest it this way, since we have a window at this place. Till this particular window is filled by close, that is, we get a close below 27534. I'm sorry, the close is 27534, but the window's high is at 27595. Till we get a close below 27595, I would consider the trend to be up. Unlike Nifty, Bank Nifty hasn't yet crossed the all-time high. Obviously, in such case, we can take cues from the left-hand side of the chart for supports and resistances. And as of now, there lies a gap on 2nd of March 2020. The gap value is at around 29,800 to 29,900. Well, right now we are at 28,465. We need to see if we get a close below 27,595 on the downside, and on the upside very close to 30,000 can be our next target. So much so for the week. Enjoy yourself, have a safe Diwali, keep safe, stay home and enjoy responsibly.